Ladies and gentlemen, please welcome your host for this afternoon, Investor Quest, James Caan.
Okay, ladies and gentlemen, good afternoon and welcome to our Investor Quest presentations for today. What we have is a group of projects, individuals who are going to present their projects to our preeminent angel investors who are going to have a look at each of these opportunities. They each have, a bit like Dragon's Den, they all have 20 million euros each to invest today. I did ask them to stop off at the cash point to bring in their cash, but unfortunately in France they do things slightly differently here. So we have no cash, but they do have their checkbooks with them. So they will look at each of their projects and get an opportunity to invest that 20 million either in one particular project or they can spread that amongst the 4 different projects. The objective today really is to get an opportunity for each of the projects to be able to demonstrate to us their ability to present and secure an investment today, a bit like Dragon's Den. So it should be a little bit of fun. The angel investors, when they get their opportunities to ask the questions to see how well the individual projects are presented, and then at the end we can allocate how much money they've allocated to each of the projects, and clearly at the end we'll then establish who the winner is today. So to kick off the event, let's introduce our first preeminent angel investor. We've got Andrew Appleyard, Head of UK Specialist Property Funds from AVIVA Investors. Come on down, Andrew. Andrew manages over AVIVA in fact manages over 248 billion in assets, including 22 billion in commercial real estate, which makes AVIVA Investors the largest manager of UK real estate. Andrew himself has 20 years experience in the property industry. Prior to managing AVIVA Specialist Funds, Andrew worked for Henderson Global Investors, where we're involved in establishing the HDI Retail Warehouse Fund and Covent Garden partnership with Scottish Widows. The Scottish Widows bit makes me feel he's a bit more like Duncan Bannatyne, so let's see you can be a bit more generous, Andrew. Okay, the next person is Hamish MacDonald. Come on down, Hamish. Hamish is Head of Acquisitions at MGPA, a private equity real estate investment advisory company which manages 10 billion assets throughout UK, Europe and Asia. Hamish has actually been in Sydney with Colliers International and moved to Europe 6 years ago prior to joining MGPA. He was the portfolio manager of UK real estate pension funds with a combined value of 500 million. So let's hope you can spend some money today. Next is Bernard Phang, Managing Director of Head of Investments Europe at GIC Real Estate. Welcome, Bernard. Come on down. Bernard represents the Government of Singapore Investment Corporation, a global investment management company established in 1981 to manage Singapore's foreign reserves. Bernard is responsible for the real estate-related investments. He's the veteran of the industry, having worked in the USA, Asia, Europe for the last 20 years. So we have a government official here with real cash. So looking forward to your checkbook, Bernard. Okay, Robert Wilson, Director of Resolution Property, come on down. Okay, Robert Resolution Property, founded 1998 with the specific aim of investing in UK European commercial real estate. Resolution currently manages over 1.5 billion in assets. Robert spent 14 years with Jones Lang before joining Resolution. Since then, he's been responsible for over £1 billion in sales. So if you spent £1 billion in sales recently, there could be 4 projects here for you to be tempted by. Okay, let's now meet our projects. Our first project is Michael Ingle, Chief Executive at Allied London. He will be presenting the Spinningfields project in Manchester, one of Europe's largest mixed use urban regeneration schemes. Come on down, Michael. Secondly, we have Martin Farrington, Acting Director of City Developments at the Leeds City Council. They're going to be presenting their Sovereign Street Leeds project. It's a major opportunity in a fast developing area of UK's largest financial and business services centre outside of London for the City of Leeds. So welcome, Martin. Where are you? Come on down. How are you feeling, Martin? Ready for the pitch? Very good. Okay, next is Clive Dutton, Executive Director of Regeneration, Planning and Property for London Borough of Newham. Come on down, Clive. Clive's going to be presenting the Royal Docks of London project, 500 acres of stunning prime waterside real estate in the heart of London's regeneration priority zone for the next 25 years. So quite a large, substantial scheme. What we're going to do is actually give the gentleman an opportunity to make their first pitch. So let's get this show on the road, and should we start with the first pitch? Should we kick off with Michael? Yes? Oh, here we go. Okay. Stephen Kennart, Director of Land and Development. Okay, Julian, here we go. Hi. Julian.
You're there.
Julian,
Hello,
good to
hi.
see you.
Nice to see you.
Now you can see
nice
Dragon's Den is clearly live, isn't it?
Yeah.
There we go. Okay, we have Julian Barwick, Director of Development Securities at Hammersmith Grove, W8. This, we believe, will surely become a place for occupiers in West London. So that's quite an exciting scheme. Okay, so we're going to kick off with the first presentation. I think we'll do Spinningfields in Manchester as the first presentation. What I would suggest, gentlemen, is, although I know you have 5 minutes, but ideally, if you can try and do it in 3, and be very precise with your questions. The key objective is what I'd like to do is get the angel investors an opportunity to kind of grill you too. So the quicker you can make it, the more interactive it will be. So should we kick off with the first one, Michael? There we go.
Thank you, James. I'm not sure I can actually do it in the 3. I have a video of Michael Ingle. I've been in charge of Allied London since 2000. Average capital employed in that time 65 million. Profits 200, and they're actually realised and cashed. I'd like to just show you a very short film of your Spinningfields.
Where the work-life balance is nurtured and respected, from coffee with a smile to walking with style, where our pride in service is always promoted, never neglected. Meet me there. Let me show you this world full of brightly lit spaces. Watch intelligent minds and warm hearts collide, where the sparks of ideas can be seen in their faces as they're presented with gusto and pride. Where resourceful individuals look after your needs and do absolutely everything in their power to ensure you're consistently left feeling pleased, though they can't stop the occasional shower. Meet me there. For gossip or banter or serious news, over breakfast or lunch or dessert, guaranteed is the service and fabulous food within arm's reach of wherever you are. A quick flash of yellow as you hand over your card. Rewards for everyday eating, where business meets leisure, where work becomes pleasure, when you or someone special needs treating. Meet me there. The kids are even catered for during the day. Why should only grown-ups get to play? With specialist events running all year round, what better excuse to bring them all down? Break conventions, try something new. Bring a like-minded friend, pull up a pew. Whatever your age, your preference for distraction, there'll be something to suit your taste, be it comedy, drama or action. Listen to the click of confident heels as they step out in style down the avenue with an eye for designer fashion. It's the perfect spot in town to indulge in a luxury item or two. As balmy evenings turn to bewitching nights, friends come together to raise a glass. Bathed in the glow of a million lights, they toast the evening and wonder how easily time seems to pass. Meet me there. Heart of the city, it'll get under your skin. Take a warm sip and breathe it all in. Take a chance, enjoy the romance and a graceful dance that is frozen. Life made simpler.
Gentlemen, that is one of the most successful urban regeneration projects in Europe, with a total value created of £1.2 billion. What is on offer inside that scheme are 48 restaurants, shops, and that is all managed by the Spinningfields management company, a company which I own 100% of. The management company has a 5-year contract to actually manage the whole estate, and 3 of the buildings are within it, and currently makes a profit of £350,000 per annum. Those contracts are guaranteed for 5 years. That business also has an exportable value, as we're actually picking up contracts in London and other cities. It isn't a normal property management company, it's a sort of place managing company, and we've actually created that place. The shopping, which is a total value of £26 million, has a rental income from that of 2.3, with an estimated rental value in 2 to 3 years' time of 3.5. What I'm looking for is actually a capital to enable me to buy those assets, put those together with the management company. I've actually raised 15 million of gearing debt on a 5-year facility. Our business plan over a 5-year period shows an IRR of 28% and a capital on multiple of 2 to 1. I've been in this privatised business since 2001. The average project IRR I've actually had is between 35 and 40%. I've actually never lost a penny of investor capital, and actually not one deal I've done over the last 12 years has actually made a loss. So the proposition, 25 to 26 million of assets, equity needed between 10 and 11, and a management company that I value at £3.5 million. I will actually sell 25% of that for £1 million. Thank you.
Andrew, what did you think?
What you've achieved there, Mike, is fantastic, and it's a very established location. I think what I would ask is, after 5 years, what do you see is the exit route for an investor?
my business has been one of actually buying distress, secondary assets, and actually returning it to the prime market in 5 years' time. We will have actually created this thriving urban quarter. I expect the rental income from tenants such as Armani, Carluccio's, Mulberry, Pret-a-Manger to be in the order of about 3.5 million, capitalised at say 6%. That's something over £50 million, and it will be a prime institutional investment.
Okay.
Thank you.
Thanks.
Hamish, is this the sort of thing that MGPA might want to fancy?
Yeah, I think it is with those returns.
Okay, ladies and gentlemen, it feels like a deal's coming on here.
Mike, congratulations. Your track record speaks for itself, of course. Just on the income, increasing it from, I think you said 2.3 million to 3.5 million over the course of 5 years. How do you propose to do that?
We've had to lease this space in a sort of particularly soft market. We have had to actually give a lot of incentives to tenants. We have a whole area of public realm on which we can actually build other assets. But actually, generally, like any hotel or restaurant even, I actually think shopping assets, you need a period of maturity. Within that portfolio, there are about 7 empty shops with an estimated rental value on those somewhere in the order of £300,000. So there's actually lots of areas to enhance our current returns.
Okay, thank you. Bernard? We've got Manchester United here. We know Singapore loves the football. Very close to the game there.
Yes, and by the way, Singapore Airlines flies to Manchester.
Oh, well, there you go. So
I
you're going to put all your money in there now, are you?
Well, I have to listen to the other three first. I thought your video was fantastic. It looks very vibrant, very colourful, very impressive project you have. I guess my question is more to do with your plan with regard to your interest in the project. You're looking for fresh equity. In terms of a long-term strategy, are you looking to stay in the project yourself?
Yeah, I would personally commit €1 million in to the venture, and I would obviously sign up for the period of the business plan, which is 5 years. I own 100% of the management company. I'd be retaining 75% of that. And I think basically the value of the asset isn't necessarily in the bricks and mortar, it's in the management of it, and that's basically what I do and what I'm good at, and I would be there for the duration.
So you're not intending to sell down below?
No. I've created a Spinningfields. It's been 12 years of my life, and I want to finish it off.
Okay.
Fantastic. Okay, Robert, give us your view.
Well, I would echo what everybody said. It's a real achievement. Go up to Manchester a fair amount, and I think it's a fantastic thing you've achieved. I'm interested, Mike, particularly in where next for you. With your vehicle, what's exciting you? If we were to do something with you, what do you think is the next thing?
The next thing is basically to find some distress outside of this asset that actually we can actually apply our creative minds to, and our delivery skills. We as a business, basically, we've always thrived off distress. I would actually regard as redevelopers rather than actually developers. We've always bought secondary assets that actually we've always created institutional investments out of us. But I think these assets are actually priced to right today, and they will actually stabilise, and we can actually do the same with these.
More offices or more retail?
I think we're a mixed-use player, sort of gives you flexibility, diversity. I think where we will operate is only in the major UK cities, Manchester and London, possibly Birmingham.
Excellent. Thank you. Michael, that was a very good presentation. I thought you had a bit of passion there. The graphics, the video, I think the information spelled out what you were saying. So very good presentation. Let's see how the other presentations go before we get to some cash. Give them a round of applause, ladies and gentlemen. Okay, moving on to our second project. We've got Sovereign Street in Leeds, and Martin Farrington's going to make that presentation.
Thank you, James. Good afternoon, everybody. My name is Martin Farrington. I'm the Acting Director of City Development in Leeds. This is what I'm offering, and I think we're perhaps unique on this stage because the investment opportunity is with a local authority, the lead agency in a very dynamic city. It's a sovereign investment opportunity at Sovereign Street, Leeds. We're looking for an investment of €30 million. We're offering a developer's return of 17.5%, developer stake of 85%, with a joint venture with the local authority that would be predicated on a pre-let. Now this is about Leeds, because when you're investing in this project, you're investing in Leeds. This is Broadcasting Place. It's officially the best new tall building in the world. It's not in Dubai, it's not in Shanghai. I'm sorry guys, but it's not in Manchester and it's not in London. It's in Leeds. And Leeds is the fastest growing city in the UK. Our population is forecast to grow by 25%, breaking the 1 million barrier by 2033. Alongside that, we have the fastest growing airport in the UK, that gateway into the city region. We have great cultural facilities. This is the Leeds Arena, iconic development. It's on site now. And this is Trinity Quarter, £350 million retail development, just a stone's throw away from this development opportunity that I'm offering you. And high quality green space is at the heart of what I'm going to talk to you about over the next 2 minutes. Sovereign Street, Leeds, 1.16 hectares, right at the heart of the city's central business district, entirely owned by Leeds City Council. And let's look at some of those unique ingredients about this site. You're right next to Leeds railway station, 90,000 visitors a day going through there, with a new southern entrance being located and funded. KPMG on the corner. KPMG have taken an exclusivity agreement with the council for brand new office accommodation on the site. Addleshaw Goddard, top law firm, are also adjacent to the site. Malmaison, 4-star hotel, adjacent to the site. And Brasserie Blanc, Raymond Blanc's restaurant, just around the corner. And what we want to do is use the KPMG development to deliver a new set-piece, high-quality green space at the heart of Leeds city centre, creating that new, unique place that the council, as the lead agency, will bring forward to de-risk this development opportunity. So there's the KPMG development. We'll bring forward as the second phase a 15-storey development, which could be hotel, mixed-use office with some car parking to the rear. And what I want to talk to you about is Sovereign Place, Plot C, 9,300 square metres of office development that will complete the set-piece opportunity of this development at the heart of Leeds. Net internal area of 9,300 square metres, a gross development value of €35 million, gross development cost of €26 million, our residual land value at £3.8 million, gross rental income of 2.625, and an investment yield of 6.25%. So the ingredients are Leeds City Council, KPMG is a top 4 management consultancy on the site. New entrance from the southern access to Leeds City Station. Right at the heart of the Leeds Central Business District. And high quality green space, creating real vitality for this development opportunity. And finally, Raymond Blanc, with his restaurant on the site. Now, Raymond is the master chef and he uses top quality ingredients on his development. I'm offering you the opportunity to be the master chef on this development opportunity. Thank you.
Well done, Martin. Andrew, can we tempt you with that?
Look, I think it was a very good presentation. What I would like to know are the lease terms to KPMG. Are they longer than 15 years?
It's an exclusivity agreement. We intend to get that into an agreement for lease by July. So my proposition to you would be that this joint venture would be on the basis that we would conclude that deal where it's their freehold that they would bring forward. They would have a freehold on that site.
Right, okay, thank you.
Very good presentation, thank you very much. It certainly does look enticing when you put it into a presentation like that, but my question to you is a development profit of 17.5% at the moment. It's predicated on the basis that KPMG will be leasing all of the space. Is that correct?
They will be taking plot A. I'm offering you plot C.
Okay.
Yeah.
Okay. On that basis, in terms of risk and reward, we'd normally require significantly more. But I'm sure that there could be a structure still whereby we could participate and perhaps we look at something to do with your residual land value and maybe back end that, for example. So I think interesting, and thank you.
Martin, the plot that you're offering, I take it has currently no tenant available on there?
No, and that's why the opportunity, as I outlined it, is predicated on a pre-let. And what we're looking to do is to de-risk that proposition by getting KPMG on the site, high-quality green space, and then de-risking that opportunity where what this opportunity will be is if you are a Grade A occupier, you will want to locate here.
But you have nobody lined up at this stage? No. Okay, so it's purely speculative for investment.
Yeah, well, the opportunity I'm offering is the opportunity to partner with the local authority and the lead agency in the city.
Okay. Bernard?
Yeah, I think from what I know very little about Leeds, and maybe the first question is if you can sort of give me some background about what's driving the growth of Leeds as a macro picture. And perhaps the second more micro question is, other than plot C, are there more lands in the area that will be available and you can release further plots, or is that it, plot C and?
There's the plot B, the plot I offered before, which is the 15-storey tower. In terms of the growth in Leeds, Leeds attracts a lot of inward migration. And as a city region, it is extremely vibrant, not just Leeds, but York, Harrogate, Wakefield, and the market towns around the city. And those together are a very vibrant economic entity that is really sort of attracting growth.
Okay. Robert?
Yeah, I think there's clearly a bet that we would need to be making on leasing an empty office building in Leeds. Which, could you tell me a bit more about how many other office developments in Leeds we'd be competing against?
Well, the office vacancy in Leeds is about 16%, which compares very well with provincial cities. The proposition I'm offering you is that we would work together in partnership and we wouldn't move forward until that pre-let is secured. But what we would do as a local authority, and this is why it's great to have a local authority as a partner, is that we're creating that environment, we're bringing KPMG to the table on the site, we're creating that high quality green space, which is that real set piece opportunity that, as I've said previously, creates that this is the must locate location in the city centre.
Okay, one quick question from me. Are you assuming you're going to have a single tenant on that site?
I think it will attract a single tenant. There are a number of large commercial organisations that are active in Leeds City Centre at the moment looking for pre-let opportunities.
So we're talking about 100,000 square feet approximately. Yeah. And what sort of rental are you looking at per square foot?
It would be between £25 and £27 per square foot.
And is that how you arrived at your 6.25% yield?
Yeah.
Okay, excellent. That was a very good presentation. I really enjoyed that. Thank you. Okay, Julian, we've all been waiting for you in anticipation, so take the stage. We're looking at Hammersmith Grove here.
Well, ladies and gentlemen, and particularly James and his team, thank you very, very much for the chance to tell you about Hammersmith Grove. I've spent the last 30 years of my career persuading the people that look after your pensions and probably mine that they should put their money into empty office buildings and hope. And I have to admit that the outcome is pretty binary. Some of them, one or two, have been dogs. The alternative, it seems to me, is not an average one. The alternative is that you simply shoot the lights out. Is it a game of chance? It certainly is. Is it a case of concentrated risk? It certainly is. But I have to tell you that in the whole of my career, I don't believe I've ever seen the odds stacked so much in our favour. Believe me, the poker machine that is Hammersmith Grove will certainly deliver one cherry. But there's a real prospect that you could get 3 in a row. Very briefly, the investment proposition, I need £50 million, all equity, no debt. And this will allow you to acquire 100% control of one of London's most exciting development schemes. Pull the lever, build the building. If one cherry turns up, we'll get some modest rental growth. We'll exceed pro forma, but it won't be an outstanding outcome. But there's a very good chance that Hammersmith will outperform the rest of West London. It has lagged so far behind the West End. We call this the 2 cherries outcome. And finally, the home run. It may be irrational, but with a recent history of rental growth, investors will flock to this very limited market, driving yields down to West End levels when we come to sell the building together. I'm not going to spend time telling you about development securities, but we have a habit of finding opportunities like this in locations that are not particularly well recognized and adding value to them by creating really very high quality environments, very high quality buildings. The Hammersmith site is it's an interesting place in London. The suburban land values, they meet the West End occupier market. And for the value investor, I think that Hammersmith is just so much more fertile than the West End, where land prices are never realistic, being populated with overseas investors. So what has happened to this 50% rule? For reasons that I can't readily explain, Hammersmith has lagged so far behind the West End of London. 1 cherry is the red line, modest rental growth. 2 cherries, we simply achieve convergence with the prime West End. After the financial collapse, for all sorts of very good reasons, there have been no starts in central London to speak of major office development. So over the next few years, there is no competition in London to speak of. It's there to be seen. The buildings simply haven't been started. And at the same time, we have this bunching of lease breaks and expiries. A year ago, an occupier would have asked his landlord if he could stay on. The landlord would have been delighted to say, stay for nothing. We'd be delighted for you to stay in the building and pay the rates. No longer. The occupiers are all bored with shoring up their balance sheets. It's time to plan for the future, to plan for growth. And with lease expiries, they're free agents to do so. I'm going to spend just a little time on this slide on the key financials. The headline, the first line is the rental level on which our numbers are predicated. £40 today plays £43 for the 1 cherry outcome, 55 2 cherries, 55 again for 3 cherries. The investment yield, as you'll see that we've employed, is 6.25%, which we hardened to 5 3/4 in the 3 cherries outcome. The total cost is 50 million, all guaranteed by Development Securities. We own the land, and we'll guarantee the building cost. The value on sale, as you can see, is significantly increased as we exceed pro forma, and the profit, which is generated by subtracting from the value on sale the total cost, increases from 8 million per pro forma to 35 million in the Three Cherry outcome. So the deal in summary, it's an opportunity to forward purchase an oven-ready 100,000 square foot office scheme in the most undersupplied sub-market in London. We'd like to talk to our forward purchaser about providing development finance as we build it. We'll guarantee the cost. And against a pro forma profit of £8 million, it's easy to see a £35 million profit on cost. There she is in all her glory. And what is a MIPIM scoop is that we go to planning committee in 3 hours' time. You can be into this deal in a week. We can get the building finished for you in 18 months. And you can be let and sold in as little as 2 years from today. Thank you very much.
Quick question from me, Julian. Why are you looking for straight equity, no debt on this deal?
I think that the banks are most unlikely to be in the mood to provide loan finance for speculative development.
Do we have any bankers in the room here? Clearly not. Okay. So you're making that assumption because you feel that bank lending is not available.
Yes.
But if it was
too early for them. Too early for them.
But if it was available, if we could get somebody to put their hand up, would that be of interest to you?
Yes, indeed, it could. It could well be of interest. It could well be of interest.
Andrew, can you organise?
And we'd certainly be providing cost guarantees, but only cost guarantees.
When you say we, does we
Development Securities.
And does we have a balance sheet?
Development Securities has a balance sheet. Yes, £300 million.
Can you do a bit of debt and equity on this deal to increase your returns?
I think I'd just look at the equity side, but
could you look at the microphone as well when you say
yeah. I was going to ask you about. So the cost side just means the build cost. So in terms
Andrew, that was all. That was land, build cost, everything, £50 million.
So in terms of the rental side of the equation, you're not guaranteeing anything on that?
No, we aren't. No.
Okay. And in terms of what's
you don't want much, do you, Andrew? No.
In terms of the top rent in Hammersmith at the moment, what is that?
I think £40 would be probably pushing it.
It would. Okay.
I'm glad you said that, Julian, because I have an office in there, so I knew exactly what the rent was. I was just about to. But
rents are moving. You know, in Paddington, rents have just moved £10. In this week, rents have moved £10. There's a transaction happening in Paddington which will evidence a rent £10 ahead of the previous deal that's been done in Paddington.
Okay, Hamish.
Julian, thank you. I completely buy into the Central London supply-demand story. With regards to the 50 billion equity investment, how much is that broken down on a capital value per square foot of net lettable area, roughly?
It's 100,000 square feet, so if there's somebody around who can do 100,000 feet and 50 million, that would be helpful.
500, is it?
That'll do.
Okay. And in terms of demand...
Sorry, Hamish, we only get one question.
Oh, sorry.
Thank you very much for that, because I know Bernard's very keen to step in.
Hamish, further questions? We can do it afterwards. Yeah.
Bernard, we need your question.
I guess one question is in terms of timing. When is this going to be delivered? And in line with that, also the leasing strategy. You don't provide rental guarantees, so who is going to do the leasing?
Bernard, I never count my chickens with these planning committees, but if it's the case that planning is obtained this evening, then there is no reason why we can't start the process of construction immediately. It's a very simple building. It's got no basement, so it can be built very, very quickly. As to leasing, it'll be the responsibility of Development Securities to ensure satisfactory leasing of the building, because as you'd expect, a part of the profit that I referred to is going to be for Development Securities account, as well as for our investing partner, and it's certainly part of our story that we're good leasers of office buildings.
Okay, Robert?
Yeah, it's an area I know well. And I think the question I've got really is the sources of capital in the world. The source of capital that we work with anyway generally expect, I think, higher returns because they would hope, I guess, to get some leverage. You know, is there any way that you can see of being able to improve those returns? You know, you're talking about 35 million less after Development Securities have had their corner on 50 million of equity.
I think one of the interesting things on the subject of finance and getting some leverage into these transactions nowadays is the position of the construction companies. They've got big balance sheets, enormous liquidity. They're trying to find ways of putting that to work, and I'm quite sure that there are contractors out there today who would be happy to take a check at the end.
Okay. Quick question from me, Julian. I mean, I get offered properties all the time. If somebody approached me tomorrow with a prime property in central London, let for 15 years, delivering me a 6.5% yield, why would I do your deal and not take a clean deal with guaranteed income with a good covenant? Why would I speculate 50 million when I can have the security of that yield today?
For the profit, for the share of the profit, James. You wouldn't simply be buying the building for buying the building to show you a 6.25% yield. By the time your profit share was factored in to the analysis, you'd be comfortably through 7%.
Okay, but it is not prime West End in that respect. So, okay, let me put it to you another way. So, if somebody offered me a deal at 7% return, which there are deals available, you know, with proper covenants, already rented buildings, you know, it just, to me, it just feels like in the current market, this has a slightly higher risk. And I agree with Robert, for that type of deal, you'd probably want to be seeing a slightly better return than I think the one that you're forecasting.
New office buildings of this sort will have Andrew would certainly be able to talk with authority on the subject, but the yield would begin with a 5 in most parts of West London.
Okay, thank you, Julian. Very good. Give him a round of applause. They say we always keep the best till last, so we now have Clive Dutton, Executive Director of Regeneration Planning and Property, who's going to present to us the London Borough of Newham.
Good afternoon. I'm the former Director of Planning and Regeneration at Birmingham City Council and Director of Regeneration of the private developer JJ Gallagher. And the opportunity that I'm going to present to you will be seen by 5 billion people a day over the summer months of 2012, because that is the place within the host borough for the 2012 Olympics. It's within an area that London can only grow substantially, which is growing east, and a little asterisk there shows that within the Thames corridor. And in fact, 10 million people a day see this through primetime TV at 7:59 every weekday evening. The Royal Docks, which is shown there at the foot of that slide in Newham. In terms of investment, I think it will be important in terms of the workforce here. It will be young and it will be diverse, drawn from the local area, and it will benefit from the connectivity across East London, which has been enhanced for the 2012 Olympics. Which gets even better because by 2017, within the Royal Docks, there will be a Crossrail station which will connect to Heathrow. You'll be able to get there in 30 minutes. Also within this area, post-Olympics, there will be connectivity into international high-speed rail. And this is a national project, prime ministerial status, as has happened previously, as you've seen through the Isle of Dogs, the Greenwich Peninsula, currently the 2012 Olympics down at Stratford and in the Royal Docks. And over the next 20 years, the opportunities will avail themselves within Newham. The maroon area on this slide shows what we call an arc of opportunity, a development platform culminating in the site in the Royal Docks, which is actually presented here over the Manhattan Island. That would take you from Harlem down to Battery Park and a third the width. And the Royal Docks is shown there in terms of scale. And imagine that so close to the heart of a global city, London. Boris Johnson has said that this area will be London's regeneration priority for the next 25 years, with a capacity for that kind of investment. Boris Johnson has also said this is going to be very special. It's going to be built out on sustainable principles. And being a little playful here, and I know it is sustainability in the desert, but probably emulating the things that are happening in the United Arab Emirates. The strategy going forward, to give you confidence, is signed off by Boris Johnson and the Mayor of Newham, Sir Robin Wales. And we build on the strength in the Royals of Excel, double in size for the Olympic period, and owned by Abu Dhabi royal family. We've granted planning permission for the expansion of London City Airport to go from 3 million to 5 million passengers a year. And any workforce within the Royals would have access within 10 minutes to what will be Europe's largest shopping centre, which will be opened by Westfield in September of this year. We have an economic strategy. This is about clustering of higher and further education. And Birkbeck will be opening their campus over the course of 2012. And to demonstrate who we've already encouraged in here, Siemens will be developing their Global Sustainability Centre, a £30 million project with the initial approach in the Christmas of 2009. It will be opened in the first quarter of 2012. That has prompted us, again with the Mayor of London and Transport for London, to promote a £40 million cable car connection from the western end of the docks and the Siemens development I've just mentioned to the Greenwich Peninsula and O2. That will be finished before the Olympics. But we're about speed and pace, not just in the interests of London, but of economic growth of the United Kingdom. So you're likely to see here one of the government's first new neo-enterprise zones. So we offer you the potential of potentially 10 years of tax breaks in the form of business rate holidays. Also, the Prime Minister has been promoting this area is called Tech City, encouraging creative industries and media and high tech here. We want to make his vision come alive, and we believe that that can happen. And that means, in this is here illustrating a model of how you can create the Prime Minister's Tech City 1 area, Tech City Plus, with a clustering of convergent technologies and meanwhile uses, and helping to benefit the local area. We've already got stakeholders in the form of these developers, who've already got planning consents, still developing schemes, and in pre-planning. We don't want to wait for the eventual developments. We think while other people are making plans, we want to bring these areas of land into productive use. Yesterday, Boris Johnson, here in Caan, announced the winners of the Meanwhile London initiative, which is free land for a year, maybe 2 years, for projects of economic and creative benefit. So your investment would be in an area which has been transformed from when the docks closed in the 1980s, and the green line is the meridian there, through to 2006, the orange indicating the development in the Isle of Dogs, through to 2012 and the Olympics, where the top left-hand corner is Stratford, the top right-hand corner is the Royal Docks, and by 2026 you have new metropolitan centres in East London, and the Royal Docks will be one of those. The local authority is totally committed politically to this, and again, MIPIM 48 hours ago, we launched our investment perspective, including sites within the Royal Docks. So be part of it, be part of London's growth, and this is of international significance, and you will be the international eye of the world if you were to invest here. Thank you.
Clive, I didn't hear any numbers in that present, lots of words, but no numbers.
Yeah. 500 acres of developable land in the docks. Now, My proposition is different to other colleagues here, because what we are encouraging is investment that meets the mixed-use aspirations of this area, and whether or not it's 20 acres, it's 50 acres, or through to 100 acres.
You're selling land, are you?
We're up to session. We're selling land, and we're selling opportunity.
Okay, but again, lots of words, no numbers. So are you saying buy X acres of land for Y amount and you're going to make this?
No, my proposition is very different, because if the investor's proposition is one with end users and developer interest and moving at pace, we, working with the London Development Agency, major landowner there, would be very much open to suggestion and to negotiation. So I'm very different. I'm not saying specifically this is what the cost of land would be, because it might be, if you come forward with such a stunning proposition of future relevance to London, and we hypothecated the value of that over 30 years, it may be that you don't have to spend anything at all, but we want your expertise, your investment, and the interest that you could bring in here to bring job-creating investment into this part of London.
Okay, Andrew, how do you feel about that?
I think it's well, what's been achieved there so far is phenomenal, and I like the attraction of that. There's been a huge amount spent on the infrastructure, which is sort of one of our key criteria. I guess what I would ask is, if we brought an idea along, is there an assumption you get planning for that? So are the planning regulations being relaxed?
Yeah, we have what we operate as a virtual development corporation. You use the London Borough of Newham's planning powers and the land of the London Development Agency, the Mayor of London. We are the fastest local planning authority in determining planning applications of all the 31 London boroughs.
Does that answer your question, Andrew?
Yeah.
Okay.
Thank you, Clive.
Remember, Hamish, just the one
just
question.
One.
Thank you, yeah.
Could you tell us a little bit about any interest from major international occupiers down there? I mean, have you had approaches? What are you doing about approaching them?
We've three things. One of them was that we think it's very important to give investors and developers a compass to navigate by. So the economic strategy I described that has been specific about the character and quality of investment that we want to see here that will supplement London's economic strengths as a world city. The second thing that we've been doing, we've been promoting that vision internationally. We launched the economic vision in London in July of 2010, and at the World Expo in Shanghai also in July of 2010. Since that time, we've had 45 specific end user interests there, all with proposals that are actually sympathetic with our aspiration. All I would say, because these things are in commercial in confidence, they all have synergy with our economic strategy, and a number of those include headquarter buildings of UK national companies and of international HQ buildings. And we're confident that we will reach the tipping point of securing a significant number of those interests before the Olympics, which will give confidence to more investors to do the same.
Thank you, Clive. Bernard?
Interesting. To me, this seems like a pretty long-term proposal that I guess I'm thinking in terms of looking at the map. How do you compare yourself to, say, Canary Wharf, for example?
With
Canary Wharf.
Canary Wharf.
Which took quite a long time to be where it is today. And how long do you think the Royal Docks would be? Not Royal Docks. It's Royal Docks. Would need to be back to be where Canary Wharf is today. Too.
Yeah. The scale is considerable. You could fit Canary Wharf into the Royal Docks a number of times. So you are talking about a 20-year vision and strategy for this area. That isn't to mean it takes the 20 years to do all of that. As we mentioned, the Siemens was done at pace within 24 months. And we will see discrete areas that are allocated to master developers and smaller parts of development there coming on board. And we would see that coming, development coming forward year on year over, I would think, probably the best part of 2 decades. What we're really, really passionate about, I think, is very important, because this is creating a new part of London. You can only do that once.
Clive, we need a shorter answer.
Yeah, sorry.
So the answer was timing, and the response was 20 years.
Okay.
Fantastic. Robert. That was Deborah Meadham, by the way.
If we wanted to find a way of getting a return on our money within, say, 5 years, what do you think we could achieve in 5 years?
As much as you want. You'll be guaranteed of all the support you could get from the Mayor of London and the Mayor of Newham to accelerate your projects
Clive,
and achieve those
we
gains.
have a number in that answer?
Yeah.
Could we have a number?
No, that depends on I don't want to be elusive. That depends on the nature of the project that you come forward, because this is about presenting opportunity here. We're very different.
Clive,
we're not being prescriptive.
Clive, I think that's a fantastic answer, but these are investors with cash. They would like a return. And is there a number in that answer?
Okay.
So
it will be.
Is it a yes or a no?
It will be a big yes.
A big yes. Okay, take a seat, Clive. Fantastic. Okay, give him a round of applause. Okay, that was really, really interesting. Just because of the interest of time, we're not going to get a great time to debate each of the opportunities and go into too much analysis. But I think what we should do is just have a quick recap from the investors, just to get their insights. And if we can, gentlemen, if we can try and keep it pretty succinct in terms of your observations and response to the 4 presentations. In no particular order, but just give us your view. Andrew?
Okay, well, we had 4 very different projects, sort of basically going up the risk curve as I saw it. I thought the Spinningfields, you've got a very established location, mature scheme, which has been incredibly successful over the period of the last 10 years. The Sovereign Street Lead scheme, great potential, needs a pre-let, to my mind. Hammersmith Grove, again, great potential. I can see the undersupply issue here in terms of the western London suburbs. And the Royal Docks is a massive long-term project. And I think your return criteria has to be different for each project. So from my 4 very interesting projects, in terms of all could be sort of potential of interest, it's how you actually structure a transaction.
Okay, Andrew, what would be your favourite in that list? In your own time, if you
yeah, in my own time, I would go for. I like Hammersmith Grove, and I actually like the Royal Docks on a long-term basis.
Okay, can you? That's fine. I get that. While I'm going round, if you can be thinking about how you're going to allocate your 20 million in terms of the individual project, you can put it all into one, or you can spread it. But be thinking about that as Hamish is going to come in with his killer blow response here. Hamish.
I'll start from, I guess, the other end, and I'll start with the Royal Docks, which I think is obviously an incredible regeneration area. We recently invested in Docklands, in South Docklands, and so we know that area well. I do think it will be fantastic for long-term investment. I think short-term question...
In your lifetime, Hamish, or beyond?
Well, maybe in my lifetime. I'm not sure about some others, but I think that I question first-mover advantage, just with the Canary Wharf example. But otherwise, I think fantastic. Hammersmith Grove, really do buy into the Central London rental growth story. My slight question mark is whether Hammersmith really will outperform, just because of the competition from other areas in Central London in terms of connectivity with the new Crossrail, etc. The Sovereign Street project, I think it's fantastic that the City Council is supporting the project. I think we need to see more of that. I think that you could potentially structure something interesting there. It's a difficult occupation market, as I understand it. So you've got to be careful. But if there was a deal that could be done now and capital invested later, then it could be quite interesting. And then with Spinningfields, I just think I know it, and I think it's a fantastic scheme, and they've done fantastically well. And having someone like Mike running your project up there would be super.
And which one are you kind of favouring at the moment, Hamish? How's the
I think Mike articulated very well how you could get short-term returns out of the project, and he'll be managing it hands-on. Little bit of question mark around how we might structure it and keep him involved, etc. But that one was really good. My thought.
Okay, Bernard.
Well, I think they're, in some sense, quite different proposals. It's difficult to rank them as such. For me, though, I mean, I have to be honest. We would normally, for office, concentrate in the bigger cities, just because of a lack of knowledge, if you like, of the second cities or third-tier cities. So I probably, for that reason, would not venture beyond Manchester. Not that there is anything wrong with Leeds. The Royal Dock, I think we will certainly need to have a partner to do that. It's not something we can do in-house. And if there's a partner with an idea who come to us looking for financial partner, then we can look at the specific proposal and look at it. Yeah, I mean, I think.
Okay, and what are you kind of fancying at the moment? What's the Singaporean view on this?
I think based on what's been presented, which is obviously a bit unfair, quite frankly, to the...
Bernard, I'd like to be unfair because I'm trying to press you on this one. Pick one.
To give an unfair answer, I were to say that I would probably at the moment leaning towards Spinningfield because it has been established for 10 years now, and you can look at the track record and you can visit the management and you can drill down a bit more, whereas the others are a bit more proposal. And maybe the Hammersmith one that would be my second choice.
Excellent, thank you. Okay, Robert, gentlemen, are you starting to kind of get a feel of how you're going to be allocating the funds? Okay, Robert.
Well, the area that I would kind of focus on for all the projects is we look for places where there's limited supply and lots of demand, because as investors that usually means we can get growth.
You're quite aggressive, aren't you, Rob? You're quite into your return, aren't you?
And so, yeah, I guess so. So from that perspective, you would say that my gut reaction would be that Hammersmith is the right time in the cycle, and there is certainly limited supply and pretty good demand in London for space.
Is that now your top pick, Hammersmith?
Well, actually, that having been said, the Spinningfields situation, and particularly...
Are you swaying
the very convincing case put across by Mike Ingle with very clear numbers, and the opportunity to get into a platform where we could do some more business together, I think is very appealing. So I think I'm
trying to pin you down here, Robert. Which one are you swaying to?
I'm swaying towards swaying towards Allied London.
Hammersmith.
No, that's Manchester with Allied London.
Okay, fantastic. Okay, now, gentlemen, start contemplating allocating the numbers. While you're doing that, I think one of the observations that I would make to the presenters is, I think you will certainly find that where you've got a very clear, a very precise financial proposition, these gentlemen are investors. They're looking at cash and they're looking at return. So I think even though the Royal Docks, I get its long-term nature, but I would still like to have seen an example of this is the type of opportunity that you could bring to us. The level of investment could be 50 million. Typically, I would expect you to receive X sort of return over Y period of time. And I do think you would have to be far more precise if you want to get a commitment on a number. Otherwise, my gut feeling is you will pitch, you'll do loads of presentation, lots of interest, but I'm not sure whether people are going to put a pen to paper. So my recommendation would be is you need to find a way of making it more specific, but use more financial numbers. I think the rest of the presentations, genuinely, I thought they were very good, and certainly I could see that you could get an investment on a pitch like that. For me, I would say probably Hammersmith was probably the cleanest, 6%, 50 million, you know, it's a pre-let, this is what you're going to make, this is what you return. The clearer the pitch, the clearer the financial proposition, the easier for the investor, especially in an environment like this where you need a response very quickly. That does help. Okay, gentlemen, Andrew, tell me how you're going to spend your 20 million.
Right, well, I'm going to spread my risk, but there will be conditions attached to spending the money.
Here comes the lawyer in this. This is subject to providing this. No, just give me a number.
All right, okay.
Can we have the chart on the screen here? Okay.
2.5 for Spinningfields, 5 for Leeds, 7.5 for Hammersmith, and 5 for Royal Docks. The Royal Docks and Sovereign Street are subject to pre-lets.
Subject to pre-lets. Okay.
Sorry.
2.5
2.5, 5 for Leeds, 7.5.
So 2.5 for Spinnings.
Yeah. Leeds 5, Hammersmith 7.5, and Royal Docks 5.
Okay. Did you get that? Yeah. It's not enough. Okay, well, that's because Hamish is going to do better.
I'm Royal Docks, 3 million.
3 million.
I think I'll get a lot of bang for my buck down there for that.
Okay.
Sovereign Street, I see as option value. Buy in now with the potential to do something later. 3 million. And the big tickets for me were Hammersmith Grove, 6 million. And Spinningfields, 8 million.
Okay, very good. Spinningfields is 8 million for you. Okay. Bernard? Let's go shopping.
Yeah, okay. I'm going to go more extreme and take more risk in terms of diversification. I'm going to give 10 to Spinningfields. And
there's a call for you, I think, Bernard. Somebody wants to up
yes.
that offer.
The check is in the mail. Sovereign Street, I need to really understand a lot more about Leeds, so I'm not at the moment. Okay. Royal Docks, we need a more concrete proposal from anybody, so it's a question mark for me. And I just put the other 10 in Hammersmith.
Okay, so you want to split 10 and 10.
Hammersmith
and
10
Spinning.
and 10 between.
Perfect. Okay. Robert?
For me, I regret that Sovereign and Royal Docks are probably too long-term projects for me. I'm sure they've got merits for different types of investors, though. I would go long Spinningfields, 15 million, and Hammersmith Grove, 5, unless there is a way of getting the returns up.
Very good. Okay, my maths isn't great, ladies and gentlemen. My numbers aren't good. However, I think my learned technical colleagues are going to tell me where those numbers add up to. But I think we've all got a feeling that Manchester United might come in quite good. Ah, Manchester, well done. Fantastic. Could we give these ladies and gentlemen a certificate and a round of applause? Well done. I think you've done a fantastic job. You've got some great projects on the go there, and there is no doubt in my mind that you will do well. So what I'd like to do is get the panel to present each of the projects, their certificates for this afternoon. So hang on a second, I'll just get you a certificate. We're printing out the winner's name as we speak. I have already signed, just so you know, I signed Manchester before you made your presentation. So I did actually know you were going to win. Okay, just to prove that point, because I know you think I'm just bullshitting you, but I do actually have a signed winner, and you have my signature there for Manchester, so I knew it was going to be the winner. So well done, congratulations. Fantastic. Well done.
Thank you very much.
Would you like to hand that out to one of the others? There we go. Would you like to hand that out? Fantastic. Would you like to hand that up, Ben? Thank you, ladies and gentlemen, and it was great having you here. I hope you enjoyed it.